Thank you all. Welcome, and bienvenidos to the New Pacific Metals webinar titled CEO Insights on Thriving and Challenging Markets. This webinar will take about 30 to 35 minutes. So for those that have registered and were not able to attend, we'll be sharing the recording afterwards. Just so we can focus on this chat, we have muted all participants, but the chat box is open for any Q&A that our host will be able to address throughout the presentation. Without further ado, I will introduce to our speaker and our host, which is John Feneck. He's CEO from Feneck Consulting. John is a former U.S. broker analyst, as well also a Sprott Precious Metals team member. He was ranked #1 in both gross and net sales at Merrill Lynch and JP Morgan. In 2021, he started the Feneck Commodities Report newsletter and regularly contributed to many podcasts, interviews, and conferences as a market commentator. He's now covering New Pacific Metals, not only as a newsletter writer, but also as investor. I'll pass my mic to John to introduce our second speaker. Thank you, John.
Thanks, Carolina. I appreciate the opportunity to host this today, and very excited to be here given the recent news you've had. I think it's great to do something like this, especially with all the news that's happening globally, for people to get an idea of how New Pacific stands out and what we saw in the opportunity. So, with us today, of course, is Andrew Williams, who's CEO of the company. And Andrew, welcome. And I know we met in January in Vancouver at the BRIC conference, and that was around the time you started with the company, correct?
Yes, that's right. It's amazing how time flies.
Yeah. So I thought it would be helpful for you to give maybe an 8 to 10 minute overview of the company, and then I'll ask some questions and watch what's happening with the questions from the audience. And why don't you kick it off for us?
Sure. Thank you, John, and thanks everybody to joining the webcast today. I think it's a great idea. So as you mentioned, I joined the company in January of this year as its president, and last month was formally appointed as the CEO of the company. And so I'm a relatively newcomer to this company, but we need to go back all the way to 2017 to really give you a proper introduction to New Pacific Metals. So the company itself, our journey started in 2017. There was an exploration idea known as the Silver Sand project in Bolivia that initially attracted the company to go into the country. And that Silver Sand project, now 6 years later, we've drilled 135,000 meters into that project. We've released 2 resource estimates, and in January of this year, we published our PEA study. Now, Silver Sand project, we consider it to be one of the best, if not the best, primary silver discovery that's been made anywhere in the world in this past decade. It's, as evidenced by the PEA study, $726 million after-tax net present value, 39% IRR, a 14-year mine life, producing 171 million ounces of payable silver in a much larger district. So that's certainly a remarkable success, and really a testament to the geological potential inherent in Bolivia, as well as the quality of our technical team. And so if that Silver Sand discovery wasn't a tough enough act to follow, in the middle of 2021, our company acquired our second project, Carangas, also in Bolivia, in a different department, about a 12-hour drive from our Silver Sand project. And in late 2021, we made a second major discovery at Carangas. We tagged into the heart of that mineralized system, and in January of last year, we had enough confidence to embark on a systematic 5 drill rig resource definition program. And that wrapped up at the end of April this year. So we've now drilled over 80,000 meters at Carangas, 189 holes. And last month, we were very pleased to announce our maiden resource estimate at Carangas, outlining 560 million silver equivalent ounces in the indicated category and another 110 million ounces in the inferred category. I mean, Carangas is a massive system. It's 3.5 times the amount of metal as what we've got at our Silver Sand project. And again, showcasing the geological potential of Bolivia. For us to come in 2017, 6 short years in this country, and to make these two substantial discoveries, I think really speaks to our original hypothesis that brought us to the country in the first place in 2017. So going forward, we've got substantial work to go at Carangas. We've got a wonderful starting point, lots of metal in that system. As I mentioned, 3.5 times silver sand. So at our Carangas project, which will be a major focus for us going forward here on the back of this resource that we'll get into throughout the session. But we got metallurgical studies, we've got a PEA coming up, and we've got some district exploration targets for us to drill before the end of this year. What we have found so far at Carangas, we think, is just scratching the surface in a much larger district, and I'll talk to that maybe later on in the presentation about why we're so excited about the greater geological potential at Carangas. So now we're sitting here today. We've got our Silver Sand project. As I mentioned, we did the PEA study in January of this year. We're working towards completing our pre-feasibility study that we're targeting completion in the first half of next year. We're progressing with our permitting studies at Silver Sand, and we're making steady progress at our Carangas project. Lots of work on our plate. And so if we step back a little bit further, talking about big milestones for this year, so certainly the Carangas resource estimate was one of them, but now that we've got these two substantial projects, we need two things: people, the team, and money. So talking about people, we kicked this off by saying that I joined in January of this year and was recently promoted to CEO. And that's me, but behind the scenes, that was part of a much larger transition, an evolution for us as a company to be one of those rare, successful exploration companies that makes a genuine discovery. And so we're now transitioning from being a successful exploration company into a project development company. And so there's been a huge push over the course of this year. We've added many bodies. I'm just the one that you see in front of the camera, but behind me, we've added on a number of seasoned mining professionals, both on our team here in corporate, as well as, most importantly, in Bolivia. So that process is very much ongoing and is important to appreciate. So we are now building, and we feel like we're almost there. A few more pieces for us to go, but we've got the team now that can successfully transition us from being an exploration company into a project development company. And I think the second key point, so the team and then the finances. So that was another major accomplishment for us this year. We've still got lots of work for us to do at both our Silver Sand project and our Carangas project, as I've given you a flavor of. But now, that's not free. It costs money to move these projects along the curve. And so recently, just last month, we completed a Canadian $35 million financing in order to shore up the balance sheet and give us the kind of cash that we need in order to be able to successfully get us to our next major decision point as a company, which is to either finance the big Silver Sand project ourselves to develop it, or sell it off to somewhere else. So now we're in a really strong position as a company, sitting here today with our recently completed financing, $35 million added to the treasury, as well as a growing and strengthened team internally. So I think that's probably at a high level where we stand today, with these two significant mineral endowments that we've defined that are both at differing stages of development. But Carangas is catching up real fast to Silver Sand. We've been moving at a very frantic but measured pace there. And then with the team to support those two projects as they move forward. And then most importantly in this industry as junior miners, the balance sheet to be able to get the job done. So I think we're really well positioned here and are feeling really good about where we stand as a company going forward.
Great. Well, thanks for the overview. I think there's a number of things to talk about there. I would say, first off, I was originally attracted to the project or to the company because of Silver Sand. Silver Sand is a really good project. As you pointed out, the PEA is very robust. I mean, I'm going off of what you just said. So you said around 726 million NPV, net present value, about 39% IRR. That's an internal rate of return, and then a 14-year mine life. Is that right?
Yeah, that's right. And I
Okay.
think the other point that I like to highlight, because those are the ones that you see, but I really encourage folks to also think about the strategic importance of this asset, the scale. So that's a 14-year mine life. Will produce on average 12 million ounces of silver per year. But because of the favorable geology at the Silver Sand project, we get into the guts of the system right away. And so in each of the first 4 years, we're going to be producing roughly 16 million ounces of silver per year. And that's as much silver as what Hecla, as a silver company, is producing this year from their 3 primary silver mines alone. So it's Hecla scale silver production from just one asset with fantastic life of mine all-in sustaining costs at roughly $10 an ounce. So yeah, I mean, you're right. I get so excited talking about the Silver Sand project because it really is a unique treasure in our industry.
Yeah, and then you mentioned Carangas, which I'm just going to look at my notes real quick here because you said a PEA is coming. Can you narrow it down for us a little bit in terms of when we can expect seeing that?
Yeah, we're thinking probably late Q1, early Q2, somewhere in that range. So if we just call it first half of next year, that's what we're working towards internally. We've kicked that process off. RPM Global, they're the consultants that are doing the work for us, our QPs. And really, it's interesting. You compare it to Silver Sand, which is this discrete high-grade open pit. You could probably throw 100 different mining engineers at that deposit, and they'd probably come up with the same answer as to how you mine it. Carangas is going to be more of an intensive process because there's so much metal there. As I said, 560 million silver equivalent ounces in the indicated category, 110 in the inferred. It's a much, much bigger system. It's polymetallic. We've got the dominant silver horizon near surface, which is the bulk of the tonnage at Carangas. But then we've also got the lead zinc zone and the gold zone at depth. Plus beneath that, we've got substantial gold mineralization that we've outlined that we haven't included in our resource estimate because it requires further economic evaluation. So how exactly do we schedule the mining scenario at Carangas? Do we mine the whole thing really quickly? Do we build a big stockpile? Do we blend it? What kind of a flow sheet do we build for Carangas? Because it is polymetallic. Is it going to be a flotation? Is it going to be a cyanide leach? Is it going to be a combination of both, where we float a concentrate, leach the silver so we can pour silver doré bars and then sell a concentrate? All these different considerations underground. Is there a higher grade subset in there that we can target from an underground perspective, a higher grade subset we can target from an open pit? All these questions, this is why we've got such a great starting point with so much metal at Carangas. And now our next big step here, and we're going to put a lot of intensive work into it with RPM Global for the PEA, but is to put forward the most intelligent plan to maximize the economic potential of that significant endowment.
When you say polymetallic, I think most people here would think of New Pacific as a silver play. So can you kind of break down for us a little bit on how the deposit looks, by metal, and if not, maybe you could refer people to, where they can find that on the website.
Yeah, great question. It's funny. It's a timely question because just this past week, separately, unrelated to this this interview, we're trying to put together some slides to help folks better understand just what Carangas is. And one of the first slides that we're putting together, it's still not done, so I can't point folks to it yet. But once it is up, I will certainly we'll pass it along. But is trying to just explain the type of deposit. Is this a precious metals? Is it base? And the metal mix at Carangas between the silver and the gold is roughly 60% of the economics. And I think it's roughly split between the silver in that top zone and the gold at depth. And then the remaining 40% of the base metals, the substantial majority of that is contained within the zinc. So long story short is that the precious metals content is still the dominant contributor at Carangas, so it very much fits within our overall precious metals company narrative, but there is still a substantial base metal credit at Carangas. But that information will all be either in our press release from our initial Carangas MRE. You can go in and do some calculations about the metal value. We filed our technical report on CDAR last month, so there's a lot more technical information there for you. And then just our general corporate deck. There's also a slide that highlights the metals. But stay tuned.
Okay.
We will have some additional slides that help folks better understand just what is Carangas.
That's great. And so anyone who isn't already subscribed on the New Pacific website, I would suggest doing that, because obviously companies can push you information like that when it is available. That's what I do for like literally over 100 companies that I'm either tracking or owning. It's very helpful to stay on top of the news, obviously, in an environment like this. So let's get back to the deal that you just did. So you said 35 million Canadian. Can you give us a rough idea of how long you think that might last? Because when I hear you talking about 135,000 meters here and and 90 or so thousand meters there, that's a lot of drilling. So like how long, which is great by the way, because I mean you have two huge opportunities here. That's kind of like what I think of New Pacific as, is this company that is clearly transitioning right from explorer to developer. But when silver pops, meaning getting above that $30 an ounce key number, you wish you would have owned something like this then, because everyone's going to start looking at companies with leverage, and you guys have a lot of leverage to the price of silver. So can you tell us a little bit more about that 35 mil and how long that might last into 2024, please?
Yeah, okay, good question. Just to be very clear, those drilling numbers, 135,000 meters at Silver Sand and the 80,000 at Carangas, those are done. Those have been spent, paid for.
Right.
So the substantial majority of the drilling at those two assets has been completed, and so really, that money then is sufficient to certainly at our current run rate. Could take us 2 to 3 years, depending on how hard we press our foot on the gas pedal. But yeah, so 2 to 3 years there, and importantly, it gives us some extra dry powder as a company in the event of either we want to move faster on the Silver Sand project with some pre-development initiatives, and that'll all kind of sync up and be dependent on the pace with which we receive our environmental permits, which is something that we're continuing to pursue. So it's nice to have that on the balance sheet ready to go, if necessary for us to embark on that spending. And then I think as well, we've got we don't talk about it as much, but we've got Silver Sand, we've got Carangas, we've had our Silver Strike project that we drilled last year, 3,000 meters, some really interesting results, 200 meters at a gram per ton gold oxidized near surface. We don't have any plans immediately to drill it, but if the market were to become more favorable for those types of stories, is a really challenging environment currently, and we're just not getting credit for those incredible drill results that we were putting out. But if the environment changed, we would have the additional flexibility to do that. And we've got a project generation team that's still roaming Bolivia, trying to find us the next Silver Sand or Carangas. And so in the event that we do find something that we like, it'll be really, we'll be in a very strong position to be able to act if necessary. So, I mean, if we just look at our current burn rate, with what we're doing, advancing Silver Sand through pre-feasibility study, feasibility study, and getting the environmental permit, as well as meaningfully advancing Carangas. There will be some drilling at Carangas. So we do have, by the end of this year, within the greater Carangas Basin, several distinct IP anomalies that we've identified. And we're just in the process right now of approving a couple of drill holes that will test those anomalies. It's not a huge amount or a huge commitment, a couple thousand meters of drilling, but we will certainly do that. But within the immediate scope of our work plans, it's really more desktop related items, because we're in such a fortunate position. As I mentioned, we've already done the bulk of our drilling, and so now you look at $35 million, and I think that's the key point, is that our work plan over the next year or two might be 15 of that or 20 of that, let's say. And so I've been in this industry, maybe not as long as you, John, but long enough to know as well that just having a little bit extra on the balance sheet can be really prudent. We are in difficult markets, right? That's the theme of this discussion is thriving in challenging markets. And we really don't want to get ourselves in a position that many juniors do get into where markets deteriorate even further and you're in a position where you need to raise money. And that's when you start to really do damage to the overall capital structure of the company. And that's been an important hallmark of Rui Feng's strategy with Silvercorp and New Pacific that's made us so successful. And so making sure that we have enough that we can weather this storm for however long it might be until we see some light at the end of the tunnel in this market. That's sort of part of the reason why we raised the 35 million. And then the other point I'll mention is just it's unanimous. All the bankers, all the lawyers, all the analysts is this is one of the toughest markets they've seen in a really long time. There is not much around there as far as of financing available. And I think the fact that we were able to go out and pull in $35 million really is a testament to the quality of the assets we have and the company that we have created and are creating to attract seasoned folks like Pan American Silver, who put up the US 10 million out of the 25 US, and Silvercorp 5 million. I think is really a testament to the uniqueness of our company to be able to weather this storm and get the cash on the balance sheet. 8% of our shares outstanding were raised. I mean, that's certainly manageable from a dilution perspective as well, when you consider that we've got now all the cash on our balance sheet in order to get us across the line. And really our next goal with this cash is to have Silver Sand be shovel ready, full feasibility study with a permit, as well as meaningfully advanced Carangas. So we're in a really strong position here with that raise, and very thankful to our shareholders and partners for their ongoing support.
Yeah, very well put. So a couple of things there. I mean, when I looked over the weekend at your share structure, just to get an update, it looks like the fully diluted number is around 176 million shares. Is that in the ballpark?
Yeah, pre-financing, correct?
I don't know. I'd have to look at the date of the slide, but either way, to your point, you've got Pan American at about 11.5% ownership. You've got Silvercorp, which we own, SVM, at about 27.5%, if I'm correct. And then it looked like management and insiders were around 7.7. So, closing in on 50% of the shares are being held in tight hands, which is really big, but also, like you said, a testament to what you guys are doing, because Silvercorp and Pan American are smart silver producers. They're not going to put money behind something, generally speaking, that's going to fail. So I think that's important to look at as an investor. Clearly, there was a lot of negativity in the share price after the deal, because we always see that, right? We see a knee-jerk reaction from someone, and then that selling sometimes feeds on itself. I sent an email to you, Andrew, along with my followers at about $1.45, I think last week or the week before, and just said, hey, look, this RSI, the relative strength index on New Pacific NEWP, is trading below 20 right now, which is nuts. I mean, when you get below 20 on any stock, if there's just nothing else wrong other than the obvious, which is the news that you had to raise some money, then you should be dollar cost averaging down. That's something that we talk about a lot. Like when I bought New Pacific the first time, it was probably around 250 a share, and it's trading well below that now, right? But I've bought multiple times along the way, and that is something that contributes to our success, is that we're not the type of newsletter writer or investor that buys once pretty much ever. We buy 6 to 10 times usually over the course of a couple of years, and just try to get our cost basis in a better place. So, I would encourage people listening to this to, do your due diligence, see if this is a fit for you personally. But, for us, when I met with your founder in November in Zurich last year, he was talking to me after the dinner and said, it's interesting, John, like so many people bought our stock 2 or 3 years ago at a double or triple multiple from where it's trading right now. And we only had Silver Sand. Now we've got, Carangas and Silver Strike. So we've got 3 different projects. And he's absolutely right. And so I think there's a lot of value right now, which we love as a value manager. One last question, and then I'll see if there's any others, Andrew. Can you talk about Bolivia as a jurisdiction? Because obviously all three projects are there. Can you tell us, like, the goods and the bads, if there are any, just so we kind of have an understanding of that, please?
Yeah, for sure, John. I'll do my best to provide a balanced view. Certainly, the first point to emphasize about Bolivia is that it's a mining jurisdiction. There's a deep mining culture in Bolivia. They've been mining silver there since 1545 was the major discovery of the Cerro Rico mine. That's the largest silver mine that's ever been discovered in world history. It financed the Spanish Empire for 300 years, produced 20% of the world's silver during that time. I mean, just hugely important in Bolivia's history. Lots of other great mines in the country. So that's maybe point number one, is that this is not a new concept, mining in Bolivia. It's very much something that's older than all of us here on this call many times over. So that's point number one. And then point number two is to look at Bolivia with a long-term view. So in the last cycle, the mid-2000s, there were three great mines that were built. The most significant of that was the San Cristobal operation. That was Sumitomo, is a nearly $2 billion US investment, one of the world's largest zinc producers, as well as Pan American Silver built a mine, and Core Mining built a mine. And those were very successful operations, and they continue to operate today. Core's project is out of mine life, and Pan American Silver's project is winding down, and San Cristobal Mining's got, I think their last reports were 5 or 7 years left. But these mines don't go on forever. But those three mines have been operating now for about 15 years, almost uninterrupted, except for the pandemic, which is a really a testament to the ability to operate successfully in this country, despite the ebbs and flows of the political cycle. Which that's the next point I'll get into, is that since 2005, there was a very left-leaning president, Evo Morales, that was elected as the president of the country, and he did some things that scared some folks away from Bolivia. That's why there has been very little modern exploration, and it's allowed a company like New Pacific to come back in after the dust is settled and make these two big discoveries like we have. But since Evo Morales came into power, there was despite all that noise, those three mines, they operated uninterrupted throughout that whole regime and that whole cycle, because the playbook in Bolivia is that if you can operate to high standards of safety, environmental benefit, and community benefit, generally speaking, the state will respect you as you embed yourself in the social and economic fabric of the country. So there is a playbook there that we are in the process of replicating, is maybe the first point to mention. But then, going back to Evo Morales, because we talk about that's the good. I'll give you the where we stand today. So Evo Morales was the president from 2005 to 2019. He tried to run past his allowable limits, which isn't something that's uncommon in the political world, and folks didn't appreciate that, and so he was booted out. There was a transitional government in 2020, and then a new president was elected, Luis Arce, who was the former Minister of Finance in Evo Morales's government. But being the Minister of Finance, much more of a pragmatic, moderate type person. He has a master's degree in economics from an institution in the UK. He understands the finances of the country, which are somewhat challenged at this point in time. But nonetheless, a breath of fresh air, someone new to rule the country. And so that he's been the guy since 2021 that we've been working with. He's been overseeing the country throughout the last 3 years that we've been operating our three projects post-pandemic. But recently, it was just a couple weeks ago, which certainly hurt us in our share price. We see it along with the yield in Bolivian bonds. Evo Morales came and made an announcement that he wanted to run for the head of the MAS party and challenge Luis Arce in the next election at the end of 2025. And that caught a lot of folks off guard. As I said, the Bolivian bonds, they sold off, as well as, we suspect that was what caused the weakness in our share price post the financing announcement, was this announcement of Evo Morales. And I think the point for folks to take away is that Evo Morales from 2005 to 2014 was a very different character than Evo Morales from 2014 to 2019. And when he came on, he was a firebrand. He was very, as I said, he did some things that scared folks away, rightfully so. But that was in an environment where oil prices were going from $50 to $150 a barrel, and he really looked like a genius for advocating for an increased stakes, an increased ownership of the state in some natural resource projects, particularly the hydrocarbon sector. But in 2014, the oil prices collapsed, natural gas prices collapsed. Bolivia's fiscal situation changed dramatically. And I haven't been in this company since then, but certainly Carolina has been here and folks well before me. Very much the feedback was that Evo Morales post 2014 to 2019 was a much different person, much more pragmatic. Since the oil prices collapsed, he went to New York, was doing road shows, like, hey, we're looking for partners here, okay, not bosses. The reason we don't want bosses, we want partners. And a very, very, as a pragmatist with a lot of charisma and strength, he was very much pivoting the country to be more pragmatic and embrace more foreign investment. And so that was really the Evo Morales that we knew as a company, and we arrived in 2017. And then, unfortunately, he was out in 2019. But in the event that Evo Morales were to come back, and let's just be clear here, he's got like 30% approval in the polls. Arce is roughly 30%, and the center right-wing opposition parties are about 30%. So there's nothing that's been predetermined here. But in the event that he were to come back, which we sympathize with the fear with folks that have been selling Bolivian bonds and our shares in particular, we suspect very much so that we're going to get the Evo Morales that existed 2014 to 2019, because the country's fiscal situation just doesn't allow the Evo Morales of version 1 to act. I think the country is in a difficult place fiscally and financially, and we think that being the pragmatic person he is, if he were to come back into power, we'll be able to work with them as a pragmatic person. So that's kind of where things stand today. It's volatile. It's like him and Louis Arce are like Donald Trump and Ron DeSantis vying for who's going to be the leader of the party in the next elections. That's where things stand today in Bolivia. There is volatility. It's part of operating where we are. We can't just to come into a country with this much potential. This is unfortunately what we have to bear, but we've done it in the past, and we're going to continue to do it going forward.
Yeah, I totally understand where you're coming from. I followed, a lot of overseas politics, like the situation in Peru with Castillo, and it's interesting because it does depress shares of companies that are operating there, but then they'll bounce back. Like if you look at BVN out there, I mean, their stock chart is clearly in an uptrend after Castillo got jailed in December. And so, there's just part of being a value investor is sort of looking at a jurisdiction like this and seeing not only the risk, but also the opportunity. And like you had said, the elections are what, Q4 of 2025?
Yep.
So, I mean, this is 2 years from now, right? Like, so why not take advantage of that as an investor? If someone's going to power sell into this market like they may have 7 to 10 days ago, we're out there on the bid buying those shares because now it's trading substantially higher, right? And it's just, I think junior mining is one of those really interesting sectors of the market where there's tremendous volatility, as you'd see something like in biotech, where if you've got the ability to attend stuff like this, or make a call to someone like you, Andrew, and ask questions of someone in your position about the company that you're trying to invest in, you can walk away with a really good idea of what your risk is, right? And there's tremendous upside here, given that metals prices are really bifurcated. If you're looking at gold, like you had mentioned gold earlier, gold traded $1,900 an ounce plus for I think about 5 straight months this year, which is insane. It's never happened before. right? And yet so many clients and followers will say, well, why is gold doing so badly? It's really not doing badly. It's held in quite well. It hasn't done what we'd all like to see, which is make a new all-time high, right? But I think that's going to happen next year. And in silver, silver really bottomed out last year in the 1750 to 18 an ounce level and hasn't even come close to cracking 18, 19. I mean, we've been saying 19 to 20 is going to hold. We think that that's unfortunately going to be even more the case now that you see this geopolitical strife in Israel. And, our thoughts and prayers go out to everyone that has been affected by that, because it's really just an awful situation out there if you're following. So with that, I just wanted to see if you I do see there's one question here in the chat. Are there other projects from other companies that you can compare Carangas to, please?
Oh, great question. As I mentioned, we're working on a few new slides to help folks better understand Carangas. I mentioned the metal mix, which we talked about, and there's also a slide with some comparisons. So nothing officially published yet, but the ones that we are talking about are, well, certainly San Cristobal in Bolivia. That's more of a zinc-heavy system, but same polymetallic, and given the Bolivian commonality. We're talking about Penasquito, right? Those kinds of big bulk tonnage, polymetallic. There's a little bit more gold in Penasquito than we have, but we've got more silver with the zinc and lead are roughly comparable. So add Penasquito to the mix. And then as far as developers go, Discovery Silver is one that we throw in there. I think our grades are the Cordero project. Our grades are certainly a little stronger than there, but nonetheless, thinking about a big bulk tonnage system with optionality. And then the final one that we looked at was Orla Mining, their Camino Rojo sulfides project. Another kind of big polymetallic system. Again, more gold there than we've got, but kind of a similar beast. Those are the four others that we're running with. So 2 in operations, San Cristobal, Penasquito, and then in development, the Cordero project, as well as the Camino Rojo sulfides project.
That's very helpful. Thank you. Let me just double check the chat to see if there's anything else. Oh, actually, we do have something else here. How does New Pacific approach operating within Bolivia's frontier area, i.e. operating and structuring risks that exist there?
Yeah. Oh, great question. So in Bolivia, the way we've set up in the frontier area is by not owning the project outright, but by having our economic interest be reflected in a joint venture agreement. So, in the frontier area, what we've done is there's actually a local Bolivian firm that owns Carangas, but we've entered into a joint venture agreement with that local firm, whereby we put up 100% of the capital in exchange for 98% of the profits. And so, technically we don't own the Carangas project, but we've got a joint venture with a 100% locally owned firm. And that's an arrangement that has been successfully used, in particular over on the east part of the country, where there's a lot of agriculture. So on the border with Brazil, in that frontier area, where there's the laws are the same, a number of farming operations that are 100% owned by Bolivians, but that have entered into these association type agreements with Brazilian firms that in effect operate the mine. So that's how we've managed the issue with the frontier area.
Okay. Excellent response. Thank you for the question, Madison. And with that, I'd like to just wrap it up here, because in the interest of time, we're at our limit. So thanks a lot for joining today, everyone. Thank you, Andrew, so much for all your comments and thoughts. And as you can see here, we've got the contact info for investor relations. You can reach out to myself or Carolina. We're happy to get those questions answered for you post webcast. So this is John Feneck from the Feneck Commodities Report signing off, and hope everyone has a great week. Thank you.
Thanks, John. Thanks, everybody. It was a pleasure.
Thank you.